been following the series or watching the show, we'll give him a chance to bring you up to speed in terms of what's going on. Welcome to the show. Thanks for being here today.
Thank you so much. Good evening, viewers.
And of course, we've had a really good time learning a lot about the ongoing pension reforms, and we know that a lot of people still might not have a very big picture of what the reforms are all about. So just to do a quick recap before we open our phone lines and take questions for you, just from a background angle, what are the reforms in the pension sector all about? What are they?
What are they? Good evening, viewers, once again. Just a recap of what we've been discussing. I'm sure a few viewers have been, watching us and discussing this issue. I'll just do a very quick recap on the issues in order to allow some kind of interaction feedback so we can be able to answer some questions. As I discussed in the last few weeks, the key elements of the reform process that we're undertaking in the pension sector is to build, the objective is to build a robust and efficient pension sector that guarantees employee savings in the form of savings as pension and also other kind of retirement savings. The key components of this reform are three, as I mentioned: securing the sector, providing regulation and oversight, introducing competition in the sector, that's liberalizing the sector, and not privatizing the sector, and also overhauling the public service pension scheme. And this involves, the objective of this is, first of all, to secure these savings. So that savers are guaranteed of the benefits arising out of their savings in terms of pensions, so that they can get their pensions timely and in the amounts which are actually required. The second one is to improve governance in the whole sector. And this cuts across the sector, both in the NSSF, both in the mandatory contributions, in the public service pension scheme, and also in the occupational schemes. The third element is increasing coverage so that everyone in the formal sector is covered in terms of mandatory contributions, but also extending that to the informal sector and also those who are self-employed, but on a voluntary basis. So that in order to increase the number of Ugandans or the workforce who are covered through the pension system or a social security system. And then the fourth element is ensuring that the system is sustainable financially. For instance, I've been citing the public service pension scheme, which is always in arrears, and also has governance problems, which makes it, even if government pays money, there's a hemorrhage and there's a loss of money, and pensioners end up not getting their monies. And then also the issue over the longer term, ensuring that people who are in retirement, they have adequate income to take care of their retirement. And that's the issue of ensuring that the savings are actually adequate in order to take care of that. Then we also discussed issues to do with the new governance of the schemes in a new structure. We talked about schemes being established as irrevocable trusts with boards of trustees and not boards of directors appointed by government, for instance. All that is going to be, over time eliminated. And also,
before you continue, if you can just ask something on that, let me ask the first question. Difference between the board of directors appointed by government and board of trustees.
The boards of trustees.
What's the difference there?
The boards of trustees, as a trustee, if someone says you're a trustee for my land or for my cow or something like that, or for my estate, for instance, if someone dies, some people say you'll be a trustee of my estate. A trustee is someone who is appointed by the members, okay? Say belonging to an organization, association, or a scheme, and they trust, let's say, Ben to be a trustee. So the members elect the people who they want them to be, the leaders, the people who have the responsibility to ensure the safety of their funds. And those are the trustees, as opposed to boards of directors. In terms of boards of directors, it's very common in companies where you have shareholders, and then you have a few directors who are appointed or who start a company or appointed by government, for instance, in the case of the NSSF currently, all the boards of directors are appointed by the minister. In the new dispensation we are looking at, it's the members who will be appointing the boards of trustees, and they'll have the powers to actually appoint and also fire these boards of trustees if they don't trust him, if they think that they are not doing a good job. So in terms of the governance structure, we also have financial managers of our fund managers. We talked about fund managers. We talked about administrators. Administrators are the record keepers, and people who are going to be giving out statements, paying out your benefits, and all those kind of things. You know, basically record keeping. And then you have fund managers, and these are the ones who will be coming up with the proposals, which they will be giving to the boards of trustees, for the boards of trustees to make a decision on where to invest and in what location, in what types of asset classes. But they are not going to be the fund managers to make the final decision. The final decision will still be resting with the boards of trustees. So
it's the fund manager that actually makes the investment, but the decision for them to make that investment has to come from the boards of trustees,
because they are the ones who will have the fiduciary responsibility to ensure that the funds which are invested and investments are actually safe. That responsibility is going to lie with the boards of trustees and not with the fund managers. And then you have the custodians, and these are for safe custody. You know, once the monies have been collected by an employer or an employee, they shouldn't rest in the accounts of the sponsors, because then the sponsors will have the liberty to use them, like is currently the case. These funds will have to be kept with the custodian. And when a decision to invest is made, the boards of trustees give instruction to the custodian to transfer funds from the custodial bank, as I told you, there are only 4 custodial banks, to the investment. And once an investment has been made, the certificate of investment or the title of that investment goes back to be kept by the custodian. So you find that the governance structure that we are coming up fully builds checks and balances and fully protects these funds to ensure that you know, there's no one who has a chance, not at all, anyone has a chance to actually take them away. There has been an issue in the newspaper that fund managers are going to come from Europe, from America and so on, and come and take away pensioners' money. That is not going to be possible, because the fund manager, as I mentioned before, is not going to hold any cash and is not going to hold any investments. He's going to make proposals to the boards of trustees, but it's also important that boards of trustees have the capacity to actually evaluate these proposals. So it would be good that they are trained, and also they have people on their board of trustees who understand, for instance, fund management or asset management or issues to do with finance, so that they make the right decisions. And then in terms of benefits, we talked about for individual benefits, of course, this guarantees the pension and also ensures that the investments are prudent investments and they give a good return to the saver. So that when someone saves, say for 20, 30 years, you know, at the end of those years, and someone retires or is in his 60s or 70s, he has a good saving that will take care of him or her for the rest of his life. And then for the economy, you find that once we have savings, right now our savings rates are very low. Our savings to GDP ratio is about 10% compared to Latin America or in Asia, where it's about 45%.
What's it like in Europe or in the US? Because usually this will probably be much higher.
Yeah, about 35% there, but they are highest in Asia. In Asian countries, China, Japan, you know, those East Asian countries, the savings rates are very high. And that helps to finance investments on a more sustainable basis, both domestically and also probably regional investments. Right now, we depend mostly on borrowed funds and also taxpayers' money, and we don't leverage domestic savings in terms of investment. So, so these reforms are going to be beneficial in this regard. Yeah.
Okay.
And in terms of also the individual, when you bring in competitive pressure. You bring in other players alongside the NSSF. That brings about innovation in terms of products, in terms of collection methods, in terms of products which are tailored to the needs of the individual. It provides choice, and I think everyone likes choice. You know, I like choice so that I can make an individual choice as a citizen, and we are going to be introducing those choices in these reforms. But the most critical thing is ensuring the safety of these funds and ensuring that these funds are invested prudently and that there's a good return, and when someone retires, there's a good income for this retiree. But there are also some savings which are made, not especially voluntary contributions, not, you know, they are not, you know, given out or paid out after 50 years.
Yeah.
Those are paid out according to what has been agreed between the employer and the employee in the scheme rules. And the law that is before Parliament actually allows this.
So it's not just about NSSF as we know it, but it goes beyond that to actually cover even different schemes that have been carried out by various organizations and companies. Whatever in-house schemes they might have will actually be under this law as well.
Yes, actually the Urbra Act, which is currently the law, provides a regulatory framework to oversee the sector, both in government, in private sector, and also these private ones I'm talking about. So it covers all the schemes that are in the country in order to ensure their safety.
Bill is currently under Parliament. Do we have any indication on when we might expect it to come into force? Do we have a timeline? Are we putting ourselves up for particular dates when we think that this might be starting to happen?
Of course, we cannot determine, or I cannot determine the calendar of Parliament. But our internal working deadline would be probably in December or January, thereabouts. That's our internal working deadline. But it will depend entirely on Parliament. Yes.
So, of course, the other big issue that needed to be talked about, and I'm sure we'll get a lot of questions about that, was the issue regarding NSSF and what happens with it. You might want just to shed some quick light before we go to the phone lines.
Yes.
About privatization and liberalization and what happens there, because everyone seems to be thinking that NSSF is coming under attack, that you're trying to steal our money.
As I mentioned last time, and if you read both the Urbra Act and also the bill before Parliament, there is no chance that any individual like me or the minister or any other person can actually steal this money. And what the level of transparency that we are going to be creating, including in a scheme like the NSSF, will make it extremely difficult for someone to really take away savers' money, because these people are going to be having accounts. They are going to be monitoring their accounts. They are going to be informed about the returns on investments, where the investments are invested in terms of allocation, in terms of asset classes, and many other items. But going back to whether we are privatizing or liberalizing or privatizing the NSSF. As I mentioned before, the NSSF itself will stay, and its assets will stay, the governance structure will stay, and those funds are protected. And their provision is in the bill, which ensure that the NSSF emerges much stronger than what it is now. What we are trying to do is to introduce transparency and to ensuring and efficiency, bring about efficiency, especially in the investment of these funds. That's why there is a provision in the Urbra Act to actually outsource these services, both the fund management and also the custodian. They can keep administration because that's allowable in the law. But in terms of the landscape, the NSSF will not change. The assets of the NSSF are not going to be sold in terms of privatization. They are not going to be privatized. They remain with the NSSF, and that's very clear in the bill that's in Parliament.
Does, from what you're saying, the NSSF can't be able to keep all functions. Is there any designation in this new act, in this new law, where any of the entities that are coming in can do one or two of the functions at the same time? Does it have to be strictly one? Can you do two or more? Is that acceptable anywhere in the? Is there a provision for that?
They can do trusteeship, being trustees and so on, and they can also do administration. But you cannot do administration and also be the trustee, and also be the fund manager, and also be the custodian. Because then it becomes very difficult to build the necessary checks and balances in order to bring about the necessary transparency. And also, in terms of investment, there are some people who have been arguing that they should be investing their own funds. And that's why the administrative costs, if you start doing everything, the administrative cost actually becomes very, very high. Of course, there has been this argument, especially by the NSSF and also the workers' representatives, especially NOTU, saying that by outsourcing some of these functions, the cost is going to go up. But actually, experience shows that actually the cost, because of competition and the efficiency and transparency, the cost actually goes down. I refuse the notion of saying that because we've not been transparent about the cost of investment, because we've been doing it ourselves, that is not costly. In fact, that kind of investment can be much more costly than allowing people who are specialized to do the investment. As you know, asset management or investment is a specialized business. It's very, very specialized. And people who do fund management, they actually think and sleep fund management because they think on how to maximize the return, but also manage risk. And that's a full-time job. And by doing that and allowing a few fund managers to undertake these services, first of all, as a scheme, you benefit from economies of scale because you're no longer looking at your own individual schemes. You know, the fund manager can maybe have 300 or 400 schemes, and they can be able to spread the cost to all schemes,
the various
schemes, so and into the entire portfolio, and that reduces the cost, in fact. And that has been the case in Kenya, and also has been demonstrated in Ghana and Nigeria.
When you're talking about these things, what the Temangalo came into my mind at some point. We're going to take a very quick break. When we come back, our phone lines are open. You can give us a call and ask Mr. Bekabi any questions you might have about the ongoing pension reforms in Uganda, any questions that you might have had in case you've been following the discussions we've been having, whatever questions you might have regarding your money, about how these schemes are going to work. Today is a show for you to simply give us some feedback and, of course, ask any questions and get any clarification that you might need when we come back in just a minute. Don't go anywhere. Welcome back and thank you for watching NTV. We're opening our phone lines now, so you can give us a call if you want to ask any question about the ongoing pension reforms with me in the studio, Mr. Moses Bekabi, Interim CEO at Urbra. That's the authority responsible for regulation of retirement benefits. Now, as we open the phone lines for some phone calls, I already have some questions for you. One of the first ones I noticed is when you talked about custodians. Now, of course, the custodians in this case happen to be commercial banks. Now, we know that commercial banks take deposits from people, and when you give them the money, they use it for their own things and then either give you a return or whenever you need your money, it's there. Are you suggesting that under this law, the custodians cannot use any of these savings for their own things? Or is that under a special arrangement with the fund managers or with permission from the Board of Trustees? Are the custodians allowed to invest this money when it comes into their possession?
No. The answer is no. The reason why they keep money is mainly for safe custody. And they do it as a service for which they charge a small fee. The monies or the funds under the custody of the custodian are not going to be part of the balance sheet of the bank. In other words, those funds cannot be lent out by the bank without the instruction of the boards of trustees. The boards of trustees can instruct the custodian and also working through with the advice from the fund manager to invest in cash deposits, for instance, fixed cash deposits and so on, because that asset class is also allowable. But the bank, for instance, Standard Chartered Bank, if it's providing custodial services, or Housing Finance Bank, or KCB, or the other bank, which is Stanbic, those banks cannot use those funds for their own balance sheet. So those funds can only be invested on the instruction of the boards of trustees, and those funds can be moved into the investment or from the investment to the custodian for safe custody. Well,
of course, the question then that for me pops up is, if the board of trustees sees that this commercial bank is doing a very good job and having a very healthy return on loans, for example, are they allowed to tell the bank, look, okay, we're giving you our money as an investment from our side, we think that it might be wise to get some interest by you lending this money to your customers, are they allowed to do that?
Well, if that's the decision by the boards of trustees, yes.
Okay, they can do that.
They can do that, but
okay.
but that will be within the asset classes that are allowed, in the percentages which are allowed in the asset classes.
Okay, let's go to our phone lines now. Joshua in Mutungo, welcome to the show. Thank you for joining us. Please tell us your question.
Yes, hello?
Yes, we can hear you, Joshua. Thank you.
Yes, how are you doing?
I'm very well, thank you very much.
Yeah, I would like to appreciate you for the program. What's this? I had one inquiry, please. Hello?
Yes, go ahead, Joshua.
Yes, my inquiry goes to Mr. Moses. Currently, the authority has just been set up. But I would like to understand the transparency involved also in the admission of the employees of the start. I will make a transparent process to be used even as we set up the authority. But I currently have the employees only working, but we don't have never put the normal transparent process going on. Yes, we're just setting up this team. So I think it would be a bad foundation for the authority. Thank you.
Okay, thank you very much, Joshua. We'll go on. He's asking, I think, about the setup of the employees. Hello, welcome to NTV. Thanks a lot for watching the show. Please tell us your name, where you're calling from, and ask your question or give us your comment.
Hello?
Yes?
Hello?
Yes, we can hear you.
I'm calling from Bali.
How is Mbale?
You know, I was on the side of the early system.
Okay.
Yeah, it's like someone happened to put a job and like I'm there with the children. I have nothing to do. Can I be able to use that money for like a small business or something else to earn a living and survive? Thank you very much.
Thank you very much. Sure, we'll get that to that in just a little bit. Hello, welcome to NTV. Thank you for watching the show. Please tell us your name and where you're calling from.
I'm Rosette. I'm calling from Swazini.
Yes, it's good to hear from you.
No, if NSS can lend us our money at a lower rate than the bank, yeah, because they invest our money and give us low return, and then we have to borrow money from commercial banks that are charging us a very high rate. So I just wanted to know whether as the owners of the money, if we can access the money at a lower rate.
Okay, thank you very much. That's taken note of. We'll get to that in just a little bit. We'll take another one and then take care of those before we come back to the phone lines. Hello, welcome to the show. Thank you for watching NTV.
Yeah, I'm calling Gabriel.
Yes, Gabriel.
From Urbra. I want to ask you about what happens with the pensioners who are on pension. How will their money be transferred to the authority?
Okay, thank you very much, Gabriel. Let's take care of these questions now, and then we'll come back to the phone lines in just a little bit. Of course, like I mentioned at the beginning of the show, today we are strictly focusing on you and any questions you might have regarding the ongoing reform process. So we'll jump right into it. I think Joshua started us off by asking about how the authority is being set up. If I got his question correctly,
Yes,
that's a very strong foundation, and how is that being done?
Yes. I think that's a very good question. At the authority, we cherish transparency. We're advocating for transparency, not only for the schemes, for the sector, but also the way the authority will be doing its operations. Right now, we are in the infancy stages of setting up systems, administrative systems, public finance management
Which is why we have to keep referring to you as interim CEO.
Yes, yes. Procurement systems, ICT systems, and so on. And that takes time. This institution, we've been setting it up from scratch. It never existed. And setting up something right from scratch is not only difficult, but also takes time. But in terms of recruitment, what we've done is we are beginning with the recruitment of the CEO. And if the caller, what's the name of the caller?
Oh, Joshua.
Joshua, if he reads the newspapers, he must have seen an advert that came out in October. And it closed on the 18th of November. advertising the position of the Chief Executive Officer. This position was advertised in all the major newspapers, and that is New Vision, Monitor, The Observer, and also the East African, and also it was opened up to international wider community in the Economist magazine.
Did you apply?
No, I did not apply because I still remain in the Ministry of Finance to try and push through this reform process until it is completed. Maybe when it's completed, then I can think of applying maybe. But right now, my agenda is full, and I'm focused on ensuring that this reform process is completed. And it will take us another 2-3 years in order to complete this reform. So I don't want to be disrupted from that.
So to answer,
and then secondly is that we've worked out the organizational structure. The board will soon approve that organizational structure. And then once the board does that, we've also been working on the job descriptions because the job descriptions are the ones you put in the newspaper. And once the board approves that, we're going to be advertising. We hope to start advertising the end of this month or early next month for new staff to come in January or February, thereabout, or even March.
Okay.
Yeah.
The other question, of course, now was about someone who has not been employed for a while and wants to be able to get the money from where they've kept the money. Of course, what is the law currently saying about that regarding to NSSF, but also when this reform is complete, what are we proposing in the bill that's before Parliament regarding that? Yeah,
in terms of the NSSF, the current law says you're eligible when you retire. When you've been in full employment, you're eligible after 55 years. When you reach 55 years, you're eligible to get actually not a pension, a provident fund, you know, a payout, a lump sum, which is not a pension. A pension is where you're paid until, you know, maybe you die or something like that. But you know, a provident fund is paid out once in a lump sum. If you blow it up, the next day you actually don't have anything. But you can also access this money at 50 years when you've been out of employment for 1 year. And that's what is allowable as early access in the NSSF Act. But what's coming on in
if I'm 35 and I've been unemployed for
you're not eligible.
There's no way I'm going to be able to get
under the current arrangement, you're not eligible for that. But what we're trying to do in the bill, there is what we call midterm access. A midterm access, if you've been contributing for, say, 10 years, and you have some amount there, you will be eligible to access a portion of that money, mainly for a residential house, acquiring a residential house. But also the bill.
The law will be clear that you can only do it for a residential house and nothing else.
The Urbra Act, and also in the bill. But also in the bill, we are going to be encouraging innovation into products which meet the needs of the savers. In other words, as we move along, there could be products which will be coming up and authorized by the regulator, which can meet some of these requirements. For instance, you know, children education, you know, maternity leave, things to do with other elements of social protection. But also going beyond what we are trying to do now, the government is also ramping up social protection system. Right now, they are looking at the elderly who are 65 and above. And in my opinion, I think we should be looking at women who are vulnerable. They have children, they don't have no income, maybe the husbands have run away. This happens all over the place in the villages and also in the cities. And also children, to ensure that the children get enough education, they get enough food. Of course, in terms of education, we need to improve the UPE system and also the USE system. Those also provide a social protection system. So what is actually also important going forward is to put in place a health insurance system. And that would help address some of these issues. But
Ugandans haven't been very keen on insurance for a very long time. I think the penetration and coverage for insurance in this country is much lower than even the savings that we have. And
it's much lower, but it's something that can happen. In neighboring countries, I don't want to mention the names, but countries around us and also countries which are poorer than Uganda, they have these systems in place, and they can be done here. And I think there is a start, and I think that we are starting. building the necessary blocks.
So I guess that also answers the question about someone wanting to borrow money from NSSF at a lower rate. Is there anything in regards to that? Is that different? Someone was asking that if I go to borrow money from the bank right now, I get an interest rate. I think the current CBR rate is probably about 18.5, I think, which means when you get money from the bank, they'll lend it to you at about anywhere between 20 and 23, 24%, depending on what the terms are. Is there any possibility that I can be able to use my savings under the new law as collateral to borrow some money at a lower rate, for example? Is there
in the new law, you'll be able to actually borrow the money or to use it as a security for a mortgage. In other words, if you borrow money, say to acquire a piece of land, to build a house, or to pay for a house, or you're constructing a house, that will be allowable under the proposed law that is before Parliament.
So it's not that you will be getting the money; it will be that you will be allowed to borrow money using your savings. As that is in
terms of mandatory contributions.
Yes.
However, we also have voluntary contributions, and we are giving in the law, government is proposing incentives, tax incentives, in order to grow these voluntary contributions. These voluntary contributions will be able to be used for anything as long as the employer and the employee actually agree. Because we know right now some of these savings are used for lending to say staff, for security, and for other kinds of purposes, and for HR reasons in terms of retention and so on. So all that is going to be allowable in the new law. So that when you save, you have, if you are in a formal sector, you contribute to a system, which is a mandatory contribution. You have a chance also to contribute a little bit more than that for other purposes, including borrowing these funds. Yes.
Okay. One last question before we take another short break and then get back to our phone lines. Gabriel, who is from what you were saying, a pensioner, and he was asking, when this new act comes into force, when we have a new bill, that turns into a law, people who are pensioners, do their funds get transferred to any of the new schemes? Because I think
no, I think there is.
That's what everyone is probably looking for too, because one of the things you mentioned is the poor governance we've been having, especially in the public service pension sector. I'm sure everyone is itching to try and see if they can be able to get a better deal. Many of the people, of course, haven't gotten their money yet, even at all. Like you said, it's in arrears. What happens to them when the new bill comes into law?
Yes. Let me explain this. There is the governance of the structure, or the governance of the pension system is going to be as follows. You have the regulator, which is the Uganda Retirement Benefits Regulatory Authority, which is a new regulator, which is a new authority, which is a new organization of government to regulate and oversee the sector in order to ensure that the administration, and management, and operation of pension schemes is prudent, is safe, and ensures savings for those who are savings, and a good return to their savings. That is the regulator. The regulator is not going to be the scheme. In other words, to answer the question, is that the regulator is there to ensure that the schemes which exist, or those to be created, actually do the business in a manner that is prudent, that is safe for the savers, and to ensure that their savings are actually protected and the benefits are protected. However, when you have a system like the NSSF, for instance, that system is going to be able to invest these savings in a manner that ensures transparency, in a manner that maximizes the return, but also managing risk. There's the element of risk in any investment. So what is going to happen is that there's going to be more return to the savers. Okay, right now, when you look at the over the last 10 years, the real return on savings, as the lady has said, that the returns are very low. They are indeed very low. Over the last 10 years, if you average the real return to investment with the NSSF, it averages about 0%. So
basically, you're not getting any interest on your savings.
And that's why there's need to bring in dynamism in terms of investment, and in terms of other aspects.
We do need to take a break. I'm not sure if Gabriel's question was answered. Will the pensioners be able to get their money any quicker? The areas that we have in the law, is there any provision that the government now must pay the areas much sooner in a specified period of time, for example? I think that's the question that, that Gabriel is asking.
No, there isn't something like that. But what is going to happen for those people who are now under the public service pension scheme, for instance, which is a very difficult system right now, is the government is going to create what is going to be called the Public Service Pension Fund, which is going to be separate. They will separate it from the sponsor, which is the Ministry of Public Service, and create a fund, a separate fund. And that fund is going to be managed by professionals and prudently, and any eligible person will be able to get their pensions very quickly. And also, as we set up systems, the regulator setting up systems, capturing databases, we are going to look at the arrears, those people who are not right now getting their pensions, so that they can get their pension. It's their right to get their pensions. And
so this will make it easier for them to get their money, maybe a little bit quicker.
Yes.
I think
and also the database and the records are going to be straightened, and it will be very transparent. And whoever hasn't got their pensions, they'll be able to get their pensions when these reforms are completed. Well, so it will take a little bit of time.
But once it's sorted, then the money will be able to
sorted out as we go along.
Well, yeah. I hope you are satisfied, Gabriel. Looks like you might be able to get your money in not so long a time from now. We take a very short break. When we come back, we open our phone lines again and, of course, take some more of your questions. We know that there's a whole lot of you that might have questions that you want to ask Mr. Bekabi. When we come back, our phone lines are going to be open. You can give us a call and ask any questions and get any clarification regarding the ongoing pension reforms. We'll be right back. Welcome back, and thank you for watching NTV. This hour we're taking your phone calls and hearing from you in case you have any questions about the ongoing pension reforms in Uganda. And joining us in the studio, as he has been for the last few weeks, Mr. Moses Bekabi, who is the interim CEO at the Uganda Retirement Benefits Regulatory Authority. We're opening our phone lines again to take a few of your phone calls in case you have any questions, things that you want clarification on regarding this. We had a bunch of questions before, and we hope that your questions were taken care of, and we'll go back to our phone lines and take some more of your queries or clarifications in case you need any of those. As we wait for the phone lines to be open and get some phone calls, I wanted to ask a question about the fund managers. They are the ones responsible for investing this money, and of course, what's in it for them will be they get some sort of commission or return. Do we have any safeguards in place to ensure that they don't end up stealing a lot of our money? I mean, they might go make an investment on maybe say 50% profit on an investment. Are there any safeguards that stop them from taking 45% of the profit and simply returning 5%? Is there a minimum in terms of what they can be able to return to us as return on whatever investment they make?
Okay. First of all, I just want to say that there's going to be a lot of transparency and reporting that is required by law for both the boards of trustees and also the fund managers to report on a quarterly basis on the return on investment and also what's happening with these investments. So it's not going to be possible for a fund manager, and also the boards of
whatever
trustees,
money they make using our money is actually our money.
And also the boards of trustees on every transaction or operation, there's going to be an agreement. There's going to be a performance benchmark for the fund manager in order to maximize the return. So it's not like the fund manager will just go there and then do their own things here and there. They have performance contracts which are going to be monitored by the boards of trustees, and also people who will be employed by the boards of trustees who are specialized in this regard in order to monitor these investments. So it's not going to be possible that they make a 40% return and only report 2% or 3%.
I'm going to ask what happens when they make bad investments and lose money, but you'll answer that after we take a couple of phone calls. Thank you for watching NTV. Please tell us where you're calling from and your name and ask your questions. Keep it to under 30 seconds so we can take as many phone calls as we can. Hello?
Yeah, hello.
Yes, please.
My name is Stephen.
Yes, Stephen.
Calling from Chinga.
Yes, Stephen.
There is something called the Special Regulation Authority. An ex-East African community DOE. with ingesting our pension in the community economy. And all that we were told is that they are controlling these pensions to be paid because they are going to cause inflation in this country. And we all heard that some of us have lost their rates, some of them are still rates, you can't even walk. Is the pension scheme going to tackle that level of defense, or is only considered Uganda pensioners only?
Okay, thank you very much, Stephen. Very good question there. We'll pass it on to Moses in just a minute. We'll take a few more phone calls. Hello, thank you for watching NTV. Welcome to the show. I think we lost that one. We'll go to another line. Hello, thank you for watching NTV. Welcome to the show. We lost that as well. Why don't we first take care of Stephen's question? He'll talk with the East African community. And
yeah, Stephen's question is very, very interesting. There are so many people who worked under the old East African community system that have never got their pensions. But to say that they have not been paid because they're being told that when they're paid, it will cause inflation. Actually, that's a lie by the people who are poorly governing these schemes. And that's why it is important to bring in or to improve governance, because this is a governance issue. There's not at all a public policy that denies a pensioner their benefits because
we're fearing
there isn't anything like that in government. So it's the people who are actually administering these benefits. They are the ones who are telling lies to the pensioners so that they can take their money.
How do we ensure that Stephen is going to be able to get his money?
So the new framework, which is also going to be expanded to the East African region in terms of coordination and possibly harmonization, is really to get the data sorted out, to improve governance, as I mentioned, and also to ensuring that those people who are currently administering these systems are not there. You have new people who are going to be responsive to the needs and the obligations of the state, and also the savers themselves, so that they can respond to these needs. Mm-hmm. So this is going to be sorted out. This is a sheer lie. There's no public policy that has prevented payment of a pensioner because of fear of inflation.
Okay, let's take another phone call. Thank you for watching NTV. Welcome to the show. Please tell us your name, where you're calling from, and your question. Okay, I think we lost that. Okay, we do have someone on the line. Hello. Welcome to the show. What's your name and where are you calling from? Yes, Alan. Yes, go ahead, Alan. Yes, go ahead.
Yeah, my dad was supposed to get like 80 million from the pension, but those people, they cut it and they gave him only 10 million. Now come.
Okay, thank you very much. She's saying I think her father was entitled to about 80 million. 80 million in her in his pension, but he eventually only got 10 million. What would have caused something like that? Before you answer that, we'll take another quick phone call. Hello, welcome to NTV. Thank you for watching the show. Please tell us your name and where you're calling from.
I'm called Jennifer.
Yes, Jennifer.
I'm a retired officer. I was working with KCCA.
Okay, go ahead.
I was working with KCCA. So since then, I've never got my pension. Since then, I've never got my pension.
Okay.
Yet other people, they paid them. Whenever I go there, they told me that you wait until December, until whatever.
Okay, thank you very much, Jennifer. I think we got that. We'll take one last phone call before we wrap this up. Thank you for watching NTV. Welcome to the show. Good evening. Okay, we lost that. We'll take care of this then. what I seem to be hearing from these two people, I think Harriet in Ginger and Jennifer, who worked with KCCA, seems to be the same thing. One person is supposed to get 80 million, only gets 10, with really, from what she's saying, no explanation. Jennifer worked with the authority, hasn't got her money. Some other people have gotten their money and she's being told, wait. Is that something that would be normal in these circumstances? Is it a governance issue?
Yeah. Yes, Ben, this is the issue I've been talking about, because the sector actually has been in a crisis in terms of governance, in terms of lack of transparency. And these are the issues that, that the reform process aims at addressing, among others. To ensure that people get their entitlements as spelled out in the employment contracts. Or when they save, actually, they first of all will be able to monitor their savings along the way. And when they are eligible to get their benefits in terms of pension or other forms of retirement savings, they get their pension. So this, having 80 million in your retirement savings account, and you're being paid only 10 is one example of the problem that we've been hammering out that we want to address. So going forward, we'll have to find out why this person got 80 million, and I encourage this person to actually access or come forward to the authority. And then we try to find out exactly what happened. We'll be able to contact the employer and then see exactly what happened. And we've been receiving these kind of complaints from Uganda Clays and others about this, and we are dealing with them. We are receiving complaints right now at the authority, and we are working out mechanisms to address these issues. But also the Urbra Act has a tribunal. In case you have a problem, you can actually, the tribunal will be set up very, very soon. You'll be able to go to the tribunal and present these cases there. But in terms of the benefits, like in terms of KCCA, there's no reason why someone should work for, say, a government entity like KCCA or a regional government like KCCA and don't get your pension. They should be able to get their pensions. And in the same way, I'll encourage Jennifer to approach us. We're on 6th floor Communications House. So that we understand what problem he has, and then we'll be able to reach out to KCCA to understand the nature of the problem. But going forward, all these issues are going to be sorted out because of the systems that we are now building in order to ensure that everyone actually gets their pension.
Okay. Thank you very much for being with us. We are out of time. We have to wrap it up here. So, but in case anyone has any issues, they come to 6th floor.
6th floor Communication House. That's where we are now. We'll soon shift to a location which is much more accessible and much more convenient.
Any chance of getting maybe a toll-free phone line anytime?
We have a website. We have a website. It's up and running now. It started this week. It is www.ubra.go.ug. Go for government, UG for Uganda.
www.urbra.
Yes, .go.ug.
Okay.
But also we have, we'll be establishing some toll-free lines so that people can actually call.
Because a lot of the people who are looking for their money actually can't afford to come. They might be in Mbali and can't travel, so they can be able to
They'll
call.
be able to reach us via email or website or toll-free numbers or even the landlines that we have now.
Mr. Moses Bekabi, thank you so much for being with us on the show. It's been an absolute pleasure having you.
Thank you so much.
Well, we hope you have learned enough, and in case you have any questions or any things that you need taken care of, you know where to go. 6th floor Communication House, that's where the office is. You can go to the website, and of course, very soon you'll be able to get access to them through toll-free lines. On behalf of the entire crew here at NTV, my name is Ben Mwine. Have a pleasant weekend.
Thank you so much.
Thank you so much.